Thank you so much for joining me on the show, Ola. And first, let's look at the operating environment in Ghana and try to understand how it could have impacted the earnings of banks.
Okay, well, the operating environment, I think one of the major things that happened in the first half of the year was the depreciation in currency. And that kind of played into the numbers for some of the banks. So we've seen revaluation gains for some of the bigger names that have some portion of their books in foreign assets. Apart from that, GDP growth has still been steady in the economy. And so you've seen that play through with the numbers.
All right, then. But let's look at the performance then. Let's get into the banks and see how they performed in this quarter.
Okay. So in the first half of the year, so for some of the bigger names that we cover, the growth has been positive. I think what you see across the industry has been that asset growth. So even though yields on investment securities has remained stable in Ghana, so although you haven't seen banks increase their investments, the absolute investment securities, you've continued to see the growth in interest income because those yields were, when they were booked, it was a longer term tenure security. Apart from that, there's also been that decline in terms of credit losses. So for a lot of the names, they've seen that decline compared to last year. So if you look at it on a group level, NPL ratio has actually declined about 3% from this time last year.
All right, but still on asset quality, though, would you say some of the banks still have some of those asset quality issues?
Oh, yeah, absolutely. This is still something that's being dealt with. I mean, around 18% NPL for the industry is nowhere near where it should be, and so there's still some level to go. You know, for the banks, a lot of that has come from energy sector loans. And even though that has consistently been in the news for the last 2 years, there's been some progress, but they haven't gotten to where they need to go yet. And so it's still something that's being worked on by the regulators. All
right. Since the cleanup of the banking sector in 2017, the Ghana's finance minister said during his speech while he was addressing Parliament a couple of days ago, was talking about the fact that the banking sector cleanup was going to cost about 21 million Ghana cedis. What's your take on this?
So currently, if you look at the way the industry is structured, so there are about half of those banks that have remained from the cleanup are doing fine on their own. However, there's that move to also boost the indigenous banks that may have struggled. And so even when they try to do that, they've done some consolidations within the industry. And so that's probably what the funds are going towards, to kind of, you know, it's almost like a nationalist approach to say that we don't want the whole industry to be filled with foreign-owned banks or foreign banks.
All right, but still from that address by the finance minister, he also kind of spoke of the fact that he thinks that the recapitalization process that they started, which had a deadline for 2018 December, that has been successful.
So successful in the sense of, yes, you know, they have been very decisive. They've made those bold steps. They've been able to implement those steps. However, now the market is not necessarily in a frenzy, but it's now the aftermath of dealing with what they have found. You know, you mentioned like the New Companies Act. There have also been other things they've put together, like corporate governance code and all of that. And what they're also finding is that in the process of trying to recover some of the bad debts, I mean, I think I was reading last week, maybe only 6% of the funds that the bad debts for the banks that have gone under, they've only been able to recover 6%. So from that angle, there's still a lot of room to grow. But then from a perspective of investor confidence, yes, it's been successful. So there's restored confidence in the industry. And then you also see that with the banks that didn't have any issues, you've seen a flight to quality where their deposit growth has skyrocketed from the other smaller banks that may have had to close shop.
Okay, but what about the monetary policy environment for the banks especially, and how the Bank of Ghana has, you know, been handling the industry?
So it's been positive. So this year they've been able to cut rates by I think 200 to 300 basis points, and that hasn't while it's signaling an easing basis. For the rest of the year, the expectation is that it will remain stable at this level. So it gives the banks an opportunity to plan around that. Yields for the banks have still been positive. And also from a lending perspective, given the fact that there's a larger capital base, a lot of the banks have been able to start to grow loans, even though cautiously. But there's that confidence to start to make those moves. However, I guess the overhang that might happen in the last quarter of this year is that they're going into an election year next year. And so you might start to see increased caution in terms of, okay, what assets are we going into and what are the political risks involved in those assets?
All right, but very quickly, your expectations for the earnings still to come.
For the earnings for the rest of the year?
Yeah, no, the ones that have not been out yet, the banks that are not released yet.
We would expect to see similar trends. So you expect to see similar trends in terms of deposit growth. Loan growth would be average. I mean, at the start of the year, we're expecting around 15% average for some of the banks, and that has already come through. So for the remaining banks that haven't released, we expect it to be around that level or lower, because the big banks have released, and some of them have even recorded plus 20% growth. And in terms of profitability metrics as well, is expected to be positive and stable.
All right, then. Thank you so much for your time on the show.
Thank you very much.
I've been speaking to Ola Alassan, a West African bank analyst at Stanbic IBTC